An overview of excise tax. In general, an excise tax is a tax imposed on the sale of specific goods or services or on certain uses. So many people might not have as good of understanding of excise tax unless they're in an industry in which excise tax will be imposed. So there's going to be a little bit of an overview of what the excise tax is. So federal excise tax is usually imposed on the sale of things like fuel, airline tickets, heavy trucks and highway tractors, indoor tanning, tires, tobacco, and other goods and services. So oftentimes the excise tax is going to be tacked on to some type of thing where it's thought that that type of good or service might be utilizing, for example, public goods and services in some type of excessive way. So for example, if you're talking about fuel tax, then the people that buy the fuel and possibly people that use more fuel then will be paying more of the tax that might be going to, say, like the roads, which is the people that are buying more fuel are getting more use of the roads, and the roads are being provided by the government, and therefore it kind of makes sense that you would apply a tax to the fuel so that the people that use more fuel and are using the goods of the roads that are provided by the government are paying, a higher share of the upkeep of the roads. So that's kind of some of the ideas of the excise tax. Obviously, like a tobacco tax is a tax basically on the burden of tobacco, the penalty or the problems with tobacco and health-wise generally, and might be then used for something like education or for health treatment for tobacco-related health issues. So that's kind of the idea a lot of times with the excise taxes. So businesses that are subject to excise tax generally must file a Form 720. There's a link to the Form 720 here, quarterly federal excise tax return, to report the tax to the IRS. Excise taxes are imposed on a wide variety of goods, services, and activities. The tax may be imposed at the time of. So then once you think, okay, I see that how you might want to tie an excise tax to the use of some kind of public good or service, so that the people that are basically using it are paying more of the tax for that particular good and service which they're using possibly. But how would you impose that? When are you going to be imposing the excise tax? So how are you going to logistically do this? So the tax may be imposed at the time of import, sale by the manufacturer, sale by the retailer, use by the manufacturer or consumer. Many excise taxes go into trust funds for projects related to the taxed product or service, such as highway and airport improvements. So again, you can think about that. Obviously, the gas tax is the most common example where you'd say, well, why would you tax the gas? Well, because you're going to think you're going to tax the gas because the people that buy more gas will pay more tax, and then that tax should go to the upkeep of the roads, and the people that are using the roads more then would be paying more of the tax. Excise taxes are independent of income taxes. So obviously the excise tax has nothing to do with the income tax. So you got to pay income tax and excise tax if you're subject to the excise tax, and everybody's subject to the income tax. So often the retailer, manufacturer, or importer must pay the excise tax to the IRS, file the Form 720. So the 720 is going to be the form. And when I say everybody's subject to income tax, maybe there's exceptions for tax exempt entities, just to point that out. So in any case, they may pass the cost of the excise tax to the buyer. Some excise taxes are collected by a third party. The third party then sends the tax to the IRS and files the Form 720. For example, the tax on an airline ticket generally is paid by the purchaser and collected by the airline. So when to file? Businesses must file the form for each quarter of the calendar year. Here are the due dates. So we have the quarter one. So the first quarter, obviously January, February, March. Deadline is April 30th, which makes sense, right? So you're going to have the quarter and be thinking about how to, deal with the sales tax, collect the sales tax possibly for the first quarter. And then it's going to be due in April, the first month after the quarter end. And then quarter two, April, May, June, deadline is July 31st. In quarter three, July, August, September, deadline's October 31st. And quarter four, October, November, December, deadline January 31st. If the due date for filing a return falls on a Saturday, Sunday, or legal holiday, the due date is the next business day. How to file? The IRS does accept paper excise tax returns. However, electronic filing is strongly encouraged when possible. So obviously they're pushing towards electronic filing in pretty much everything they can at this point. To make the process easier for taxpayer, the contact information for all approved e-file transmitters, there's a link to that here, of excise tax forms is listed on irs.gov. Businesses can submit forms online 24 hours a day. When businesses e-file, they get confirmation that the IRS received the form, which is nice, so you can get an information confirmation that it's not lost in the mail. The IRS has it. Also, e-filing reduces processing time and errors. To electronically file, business taxpayers will have to pay the provider's fee for online submission. So there's going to be a provider's fee for the filing, but you do get the benefit of that added security of the filing, or the assurance of knowing that the tax return has properly been received. So the excise tax forms available for the electronic filing are Form 720, Quarterly Federal Excise Tax, Form 2290, Heavy Highway Vehicle Use Tax, Form 8849, Claim for Refund of Excise Taxes, Schedules 1, 2, 3, 5, 6, and 8.